believe, episode number
Yeah.
6. And so I'm Trace Cohen. This is my
Max
brother,
Cohen.
depending on which direction, Maxwell. And we're the Startup Brothers. We've been in tech, startups, venture capital kind of our entire lives. I'm on the tech startup side doing VC and angel investing. Max helps out with that, but he also has a great CPG direct-to-consumer company as well.
And we see all aspects of business, from raising capital to executing to sustaining to building to selling. And we're here to explain, this month's worth of drama and all the exciting things that have been happening.
Yeah. So it's August 10th. What's been going on for the last week or so since we did the last one? And I kind of wanted to start with what we know best, early stage investing. And so I try to be a thought leader, right? Sometimes a S poster. I'll say shit poster. And somewhat of a thought leader of putting out content there to drive engagement. We always have to be top of mind, right? Want to go viral. And one of my last posts was saying, at Pre-Seed Seed, we invest in founders who figure it out. Iteration is the new innovation. And I guess I hit a chord, got hundreds of likes, which basically inundated me with hundreds of messages across LinkedIn and Twitter. And I would say most of the messages I got in DMs weren't great. As a founder, you are busy, you're out raising, and I totally get it. I've helped dozens of companies raise. Max has raised millions of dollars. And half the messages I got were like, hey, what's up? We should talk. I'm like, I don't know you. I click on your profile. I still have no idea what you do. And a lot of them were then like, hey, can I pitch you? And so at least you shouldn't ask for permission. Like, I don't know you. Like, can you pitch me? Of course you can pitch me. You just reached out to me. Can you reach out to me? Of course you can reach out to me. And the funniest thing is when people say, hey, can I ask you a question? That's a question. You're asking a question about asking a question. So basically diving into it is you kind of get one shot. You need to shoot your shot, be like, hi, I'm Trace Cohen. I'm an investor. This is what I invest in. This is why I'm the best. This is how my investments have done. And this is why you should invest in me. I'm like, great. I have, if you look at like a doc send, I would say the average investor spends maybe 1.5, 2 minutes going through a deck.
Yeah.
Things have to pop out. And so I was basically saying, great, who are you? Why are you doing this? What does your company do? If you send me a paragraph about what your company does,
have to ask them that.
That's already a
what
loss.
They should lead with, right? We all know the questions that we have to answer.
Right. And there's niceties. I get it. Ooh, I'm an investor. No, I'm some guy sitting in a room here. I'm in the business of finding you. You are finding me, and then we kind of like have a pair. But like my job is to invest in companies that will exit, and I'll talk about kind of what our roles are. But Max pitched, he raised millions of dollars, and we went through the process together and definitely iterated over the years. He's been in business for years. And so he perfected his pitch, and he's helped a lot of other companies pitch as well and make introductions. And definitely what we have found to be the most effective is shoot your shot. Don't ask for permission because you're not doing anything egregious. Like, hi, hope you're well. Okay, nice. It's like when you write an email, hey, hope you and your family are well. It's been so long. Okay, I know we want that, but this is business. Say what you do. Get rid of all the jargon. If I can't figure out what you do in 60 seconds, like an elevator pitch is what exactly you should send. So yes, in person is kind of gone and you're not running really into investors in an elevator. I was just watching Tommy Boy and he has like Zelensky in the elevator behind him. And he's like, oh, it's Zelensky. Like, oh, hi, I'm Tommy Boy. It's like, oh, like, good for you. Like, what's your pitch? Okay, bye. Like, he wasn't ready. And so not everyone is a salesperson. Not everyone has that. But if you're digital, you have as much time as possible to send the perfect email. We know it takes a long time and you have to kind of personalize it, but don't ask for permission.
No, it is awkward, especially if it's a first-time founder, which it seems like, when we read over a lot of the tweets and people that were reaching out to you. Pretend you're a second-time founder is the best way to do it. I don't know whether, if it's truth or not, bend the truth, tell the truth wisely. But, I equate, these type of people reaching out and these type of sales pitches as, you're in a retail store and that product packaging needs to catch your eyes as you walk by. And in many cases, you can imagine these investors are running by as there's just so much going on. They're living their own lives and they're also hunting for you as well. So shoot your shot. I recognize relate a tiny bit. Know that Trace is from Long Island. You had a great time at that one place at one time. So it's not fully just business. It's obviously pretend you're a human as well. Because in many cases, when I first started my first business, I was an inventor. That's what I would describe myself as. I'm not a money person. I don't know anything really about finance. It's CPG maybe, logistics, supply chain, negotiations with retailers, negotiations with investors, negotiations with clients, negotiations with new employees. And so you have to be
It
all
was all
new,
new to you.
but they all do somewhat come down to the same category. As a second time founder in my own business, as I'd like to say in the past podcast, now we know what they're looking for. Now they know what buzzwords are, and there are buzzwords. And if you don't talk about your exit in your first pitch, I know it sounds so weird to talk about something that's a dream almost, but that's the business he's in. That's the business investors are in, and they want to make sure you're building a business that's exitable. Trace always has this funny line saying, you're just a lifestyle business, and you'll be self-sustaining. It's cute, it could work for you, but how am I going to make money?
Right. And back to the right on the head that, okay, you have your idea, and it's always interesting, and I don't like it. I don't think a lot of investors like it when you call what you're working on a project. You can be an inventor, and that's a lot more in the CPG patent side, maybe a little bit more hardware oriented. But as a founder, this is your company. So when you call it a project, that's just like little, not red flags, but something like, okay, you're kind of working on this. On the other end, being called a lifestyle business isn't a bad thing. Not every company, well, most companies are VC backable. The last year, which we'll talk about, kind of dispelled that, and now we're seeing the fallout from it. But as Max said, I'm in the business of exits. I talk to dozens of companies a week, and I'm like, this is great, but you can have an exit slide. I should know kind of who would acquire you based on what my industries are. And maybe you have some connections there, you know them, and you're looking like a piece of cheese that they need to acquire. But you need to be acquired or IPO. I don't get money back until you get some type of liquidity event. So I'm in this for 5-10 years. And so you can generate millions of dollars in revenue. That's great, but that's not good enough. By the time you get acquired, you're probably doing 50, 100 million, hopefully billions at an IPO. And so if you're pitching in 5 years that you'll do $10 million, good. Hopefully you'll throw out some EBITDA, some profit. You can take it home and you'll probably make more money than most investors. But I need to know, even though I think of our 60 investments, maybe 4 have actually done 50 million in 5 years. But what would it take to actually get there? And do I believe that that can happen? And so half our investments are pre-price, pre-revenue, a lot of hopium. But do I believe that this could be growthable, sustainable? We'll get over that kind of growth at all costs. I've seen a few Series A investors now tell my pre-seed C investments they need to see profit at a Series A. I think it's just a slight different mentality and also an easy way of saying no as well. But share as much information as possible. Don't say, hey, here's my deck. And that's the least you should do.
I might be passionate about what I do per se, maybe, but I'm here to make money. And if I don't exit, I just live off a salary, right? So, as the largest shareholder of my business, I have just as much motivation as you shareholders have in your motivation. I remember I had a shareholder saying, I'm here to, look over everything from, your other shareholders. And I go, I am the largest shareholder. I do everything every day on behalf of the shareholders. So what I saw on a few of your LinkedIn tweets, that doesn't make sense. Some of your tweets, I've seen a lot of people putting almost like a pitch deck on Twitter. And I really, really enjoyed it because it's a thread of 140 characters per tweet, I guess. And it really gets to the gist of it. Now I feel like there's a science and there's a template. You just fill in the blanks at this point. 7-10 years ago when we were building our businesses, things were incredibly expensive. Building a website was $20,000, and you had to be able to code, and you're relying on other people. The WooCommerce and WordPresses of the world were incompetent and impossible. So many moving pieces to make sure things happened. But with now, I from my perspective, it's easier to bootstrap a business than it's ever been. And so I feel like I know you are earliest stage and pre-revenue, but there's definitely easier way to show revenue before pre-revenue, if that makes sense. Anybody could build a website and get traffic to it, and if you have customers, terrific. I had to find my first customers at trade shows and take out magazine ads. Oh
Oh
my!
yeah, I
So
know
I
that
feel like
business.
I not to make it any harder than to anybody, but just an idea at this point is fine. But having some execution, like a website, having a competent partner in place, these are things that are part of the pre-seed businesses now. I feel like pre-seed is more mature than just um, somebody who has an idea and needs capital. I feel like you have to have some qualifications to be a pre-seed company these days compared to a few years ago.
Yeah, it definitely is harder and easier in some regards. And at least this year, the bar has gone up. We have higher expectations because hopefully more people are doing due diligence, not DUE, DO, actually doing diligence and not saying the round is closing tomorrow, you have to wire. Hottest round oversubscribed. And so it's interesting in terms of branding of what we invest in. It's something that I am always constantly iterating as well. I know what I don't invest in. And so that's great. It's easy to say no and get to an answer and tell you, sorry, this isn't for us, which I send out, unfortunately, a lot. And so I know that my background in media, PR, comms, business strategy, consulting, I don't know anything about fintech, bio, health, education, or insurance. So that's easy. I don't do that. It's kind of carving away to figure out what we do. And then personally, I was in PR comms, so I won't touch anything in that space. I don't believe there's any money to be made. I got through those posts, a lot of people doing event tech. I was in trade shows, conferences, won't touch anything in event tech. I've been burned. There's no big exits, right? I don't see that there's money to be made there. I met my wife on Hinge. I will never invest in a dating app. And then also valuation wise, we're sensitive. Nothing over 10 million in terms of evaluation, which was kind of hard to do. And so between all of that, I say 75% of the time, easily it's a no, just because you don't fall into those buckets. And so what do? A lot of enterprise, B2B, SaaS. It's recurring revenue. You sell big clients. Hopefully, as Max was saying, you have expectations of, you have some expertise. You know who these people are. You were in this industry before. When I see somebody who's like, oh, I just started in this, I never did this before, it kind of seemed interesting. I'm like, okay, like, can you figure this out in the next few months? Or have you spent the last 6 months diving in and becoming an expert in this industry? Like, this is all you eat, sleep, and think about. And so that's what I need to be convinced of. Half our investments are pre-product, pre-revenue. And now I have a lot of friends who are at the growth stages, like Series A and above, who are like, how do you do this pre-seed thing? Like, how do you invest in nothing? It's the founding team. And so back to the original thought of, if you ask me if you can pitch me, if you say, hey, we should chat, you're in the business of sales, most likely. And like your first year or two is founder-led sales. So if you can't do it as a CEO and founder who are running a business, but also running a fundraising process, you have at least 2 full-time jobs. Oh, and then your entire just life, which unfortunately you have to figure out your work-life balance. It's a lot. And so you just need to plow forwards. And it's tough getting no's, and I hate saying it.
But it's the same
It's
story.
not easy,
And,
but just
it's
go
been
for
for
it.
the past decade where, I think
Yeah.
Jeff Bezos pitched 38 people before he got a yes. So, it's the persistence and consistency. And guess what? So is your business. And so is everything else you're doing in this business is about persistence and consistency and getting smarter every single time. My biggest piece of advice is I'd like to tell people that my business plan is a living business plan. It is not static. You came up with it when you were the most naive and the dumbest you've ever been, at least in the beginning of your business. 6 to 9 months in, you might iterate or world circumstances force you to iterate. So valuations seem to be pretty sane, but as a founder, you have to be so freaking confident in what you're doing because I could tell immediately if you don't believe in what you're up to. And the coolest part is if you actually believe in what you're doing, that
Hmm.
consistency and persistence almost comes naturally. The no's are encouragement. When people say, make fun of your business or say something, you use it as motivation. It makes you hungrier if you continue to believe in what you're doing. If you have any doubt, traces of the world could sniff it out immediately. And the other truth is I partnered with a company that I believe my products should be under. Can I take my products from zero to a few? Yes. But does my product deserve a home that could take it from a few to endless because the company's just better infrastructure? It's in the space I need. So we're not telling you to become your biggest, competitors and take over their business and start competing with them, but we're asking you to chip away at them that they see you potentially as a threat and that they say they need to acquire your business because they think, what was it? Instagram was bought for $1 billion and then now it's worth 300, whatever, a few billion now. And everybody goes, oh, if the founders just held on to it for a few more years, they would have got the $38 billion multiple. And the answer is no. It would have never became
Nope.
that if it wasn't guided into, Facebook's direction. They did that. There's companies that I do believe could take my product from where I've built it over the past 7 years to sales that would annihilate anything I could possibly do my personal self.
Yep. And so I have founders reaching out to me, and probably something I've learned over the years. I was naive early on. I made some what I consider bad investments. I didn't know the game. And when I describe the game, it's like, great, you're running your business. But do you know our game? Like, what business are we in? Great. As Max said, the business of exits. But
Yeah.
at Pre-Seed Seed, I'm also in the business of raising more capital. Yes, you're supposed to be growthable, scalable, profitable. Not really. Like, I need to find companies that I invest in and they can go raise more money. And so I spend a lot of my time like in the markets. I have my friends at the Series A that I'm basically a scout for because I have to know what they are going to invest in, not today, but in 12 months. So my job is almost like predicting the future. And I have to believe that if you raise money now, what metrics you're saying you'll have in a year or what my friends are expecting to still want in a year. And so where is the also markets going in terms of stocks? Who's being acquired? What are other companies acquiring to compete with you? Or what are they going to launch? And so it's a lot of data points that we try and figure out. And so it's difficult for first time founders who don't understand kind of the game we're in. You're like, oh, it's perfect right now. I just need $1 million. And someone pitched me on LinkedIn. They're like, yeah, in 3 years, I'll be doing 29
That's the
billion in
hardest
revenue. I'm
part.
just like,
When
okay,
brilliant
delete.
people put
Like
silly
there's a
numbers on the
fine
board.
line. Right. And I'm just like, there's a fine line between persistence and vision and insanity. And we kind of have to agree with you. Like, they're a little not so crazy, but like, that's what you need to be a founder, to start a
Yeah.
company, to will something into existence and convince you, your founders, investors, and then employees that this is a good idea and that they believe they can make money off of this. It's difficult. So I tell people don't start a company that they always will. And
Yeah.
you have to kind of learn trial by fire. And so that kind of takes us into what's happening now. Right now, it's very difficult. Not that it was ever easy to raise capital, but yes, 2021 was easier. And right, like a pig can fly in a stiff wind, one of those weird lines. And so right now, I'm helping my companies raise capital. If you have some traction and you're kind of close, then hopefully we're getting these bridge rounds, what we're calling like seed two, bridge to Series A, pre-Series A, whatever it takes at either a flat round or a slight up round, just to stay alive. We're seeing, as you can detest in the markets, not just stocks are coming down, so there are multiples. So that means growth IPO is kind of frozen because there's no more IPOs, very few. And then Series A is like, well, my multiples are being taken down. And then I'm like, okay, well, I still see a lot of pre-seed seed deals because it is a lot of companies. We don't spray and pray, but last year we made 12 new investments. This year only one or two. So I merely have just
And
protecting
you
my
guys have your own
portfolio.
businesses to run, right?
And so
VCs don't work
as
for
Max and I would,
free. And what I have learned from the pitching side is that there's professional founders, there's second-time founders, but there's also amateur founders in the same respect that there's amateur VCs, amateur angels, and very highly respected, investors and angels. So in many cases, we like to joke around, get to the answer no as soon as possible. I like to push the investors a little bit. That shows that you're in control of the round. Whether it's true or not, I need
Yes,
you have to tell me an
exactly.
answer by August 21st, or I'll just move on with my next my next prospects. So it's about being in control. Don't be scared of investors. They need you. Investors need founders. I'll repeat it. If we don't give them
We're
something
only in
to
business
invest
because
in,
of
they
you.
literally run out of money and they run out of business. So remember that. We are what they need. And don't let an amateur lead you on for too long. Don't let a non-professional angel, take emotion from you and waste your time. You need to vet out the angels. You need to vet out these VCs and make sure that they're serious and they put their damn money where their mouth is. Be in full control. You are not at the mercy
Time
of
is
these
your most
VCs.
precious
You are not
resource.
at the mercies of these money people. You are at your own mercy of what you can accomplish and get done. You need to come at these people stern, confident, a little narcissistic. You have to be crazy to start a business. This isn't fun to jump into magma and trying to figure out a way to get out and survive without with all the burns and scars that you have. We are in the business that they are in, but from two different perspectives. But by the end of the day, it's just business, and people waste time. And I've learned, over the past few years, there is talent out there. There are competent VCs out there, but you have to hire and fire a lot to find them. And it's the same respect of investors. Don't let the first 37 investors get you down, because for all you know, that 37th, just like sales, don't let that big sales put you down, because maybe the fourth one is your anchor client and brings you to the Holy Land.
And on that fundraising, if you're wishy-washy in your fundraise, it's not a sign of strength. We always want you to be in a position of power. So when I meet with a founder and they're like, we're trying to raise like 1 to 3 million, I'm like, well, what is it? It's a company. Or should know, like, if I raise $1 million, where it's going to be allocated. And so if you're raising for 12 months, well, like, how much do you need for 12 months? I had a pitch this morning and they're like, we need 12 to 18 months. I'm like, okay, that's kind of what you think I want to hear. And that is, but like, how much does that mean? 1 million, 2 million, 3 million? They're like, well, I don't know. We're not sure yet. Like,
and if you're not sure,
you better
make it
get
up.
sure, because that's what investors should expect of you. We can figure out the value.
Yeah.
Right. And then iterate later. Say, like, great, we need 2 million. If it comes out, you end up with 1.5. Okay, fine. That's not that bad. You still closed it, and that's your job, to bring money into the company, to grow it, to hire people to spend on marketing, partnerships, whatever it takes.
Life and building and growing the business. Raising money, as Trey said, is its job in its own, on top of a job of its own, on top of taking care of people and paying their salaries and health insurance and all the above, and including your life. So, get to the answer no as soon as possible. Be thankful that Trey says no immediately. And if, I've seen some people ask for explanations of why they said no. And, if he's generous with his time, he'll do that for you. But don't get emotional. Move on. Next. It's up to you to make it work. And I'm just an inventor originally. But you have to become this weird money man, weird confidence, and put yourself in incredibly uncomfortable situations. But you must be in control.
Yes. You, the founder, the founding team, we see people having like advisors reach out on behalf. And look, if you have never raised capital before, if you've never been in tech and startups, it's probably frowned upon. We've never used a broker. We get emails from like advisors. Okay, like if I know who you are and like you actually are some business professional, are you an advisor? Do you get a piece of this? Are you actually an investor? So like, what's actually your relationship with the company? At least in the pre-seed and seed, we want you to raise the capital, because of exactly what Max said. This is a learning process. You are also, people joke about it and have their different takes, you're somewhat in the business of raising capital as well, because time is being cheated by money. The more money you raise that's reasonable, not overly saturated,
guess what? That 12
allows you
months
to
worth
cheat.
of capital goes by real quick. And in many cases, these are founders that never had $1 million, $2 million in a bank account before. And having access to that, always have a bootstrap mentality, but it also makes you the opposite sometimes. You'll throw grand slams out, swing for the fences in many cases, and that costs you $250,000, and now it didn't work out. So just be incredibly strategic. These hard times, as we mentioned before, I think are going to be good for people and businesses. And just full control. We're both in the same business. We both have the same goals, but make sure to weed out, funny companies, but also make sure you know what type of investors you also want. Do you want strategic investors? Do you want dumb money? And there's a lot of dumb money out there, but a lot of the dumb money comes with silly opinions, emotions, and the strategic money is harder to find and it creates more of a partnership, but that could excel you to the next level or use their infrastructure to help you get to the next level, or even have them mentor you. So, what I've learned is the older angels, the older investors, you're just a transaction to them in many cases. It's very sad. But be very thankful for this new generation, I am, of investors where they are value adds. Whether they're strategic in the way that we used to call it, partnering with, me, if I got a VC from Procter & Gamble, to me, that's a strategic. But now if I could get a strategic investor who had a wonderful direct-to-consumer, it didn't matter what they sold, they'll be able to help me with supply chain, help me with margins, help me with all the little expenses in between. And this new generation of angels is very wise and incredibly helpful. Exactly.
Yeah, they're hustlers. They're previous founders, operators, investors who just personally will invest outside of a fund, or they just have a very specific expertise doing something that made a lot of money that has nothing to do with technology. And so take some words of wisdom. If someone gives you advice, just nod, say thank you, and take whatever you can out of it. People will give you a lot of advice. Don't follow it. Just, I want to be heard. If you don't use it, fine.
They need you.
You're in control. You make decisions. You have to be decisive. And so kind of navigating the current environment, because the last 2 years were interesting to say the least. Let's start at the top. Great. Stocks are down. Inflation was kind of flat today. They announced the CPI. So some stocks went up and some went down depending on where inflation hits the most. But as Max and I were talking before, the biggest VC the world has ever seen, SoftBank, they just wrote off $23 billion of losses to some extent. And it followed exactly like the tech stocks, way up and then way down. Could he have sold Masa-san? Sure. But he brought $1 billion and created this growth plus stage where it's like, great, the WeWorks of the world. Okay, they were valued at $47 billion and that didn't work out. And now they're somewhere $3 to $5 billion. So we only lost $10 billion there, but that was a year or two ago. But stocks, they're public. And how can you sell off $10, $20 billion of public stocks without kind of cratering it, taxes? He has a 100-year perspective. But I believe there's also $20 billion raised just this year alone, probably started kind of last year. So there is capital out there. It's waiting patiently, and our expectations have gone up. And that means, unfortunately, to some extent, you have to do more with either the same amount or slightly less. And I think we're getting back to basics. And in the next 60 days, now that earnings season's about halfway through, we're seeing what companies are doing good and bad, what companies are laying off. Yeah. Some are just doing it to trim because generally a layoff is perceived as bad. Some just hired way too much because during COVID, it's such a surge in demand. It pulled 2 years of demand and other issues ahead. And now we're dealing with it, right? All these advertising companies, right? And how to right size. Because as Max said, these are living, breathing companies. So unfortunately, a lot of people have been laid off. And the pro I see to that is a lot of these people are talented. They were working at a company either in the last few years, they got options, hopefully made some money, or they have a very specific expertise. They're going to start companies. And for the last few years, it was really hard for startups to hire some of these high-level executives because they just couldn't afford them. But now they're hungry again. They work the corporate. They have very specific expertise and experience of having done this before. I see them in the next 6 months really starting to start their own companies, or the ability for some cool startups to be able to hire people they never would have. Yeah. And so this is what Max was saying. The
Back
kind
to
of good aspect
reality.
is we're getting back to basics, back to fundamentals, unit economics. Maybe not. Yeah. Oh, there goes gravity. Yeah, everything just
And
fell
it's
out
nobody's
from
fault.
beneath
It's a
us,
little
and
of
we're
everybody's fault.
all
It's
trying to
his
figure
fault.
it out.
You know,
And so
it's
we're in
your
earnings
fault
season
for
right now.
overfunding companies. The way I look at it is you're injecting steroids into companies. This is not organic. This is not soft organic growth. This is steroids. And we all know the long-term consequences of steroids, right? Just physically and like, watching, wrestlers, Hulk Hogan and such. You have to continue to inject those things to the day you die. And that's what happened to these companies. They lost the injection, and then their health went bad, and that's what happens. And so you saw it go up quick, and now it's goes down quick. But in reality, if you zoom out, it's kind of going on its medium average, as it always should and always will convert back to.
Right. So yeah. Right. It's going like this and then back up for some companies that deserve it, and that's what we're seeing right now. This downfall in the stock started around January with like interest rates and Jay Powell. But now that we're in August, we're in quarter three, we now have two quarters of earnings to see like what kind of broke. It takes time to write these ships. These are hundreds, thousands of people at a company. Like they don't just iterate as fast as kind of startups and we want them to, right? We want it now. And so unfortunately, yeah, they're laying off 5 to 30%. A few are shutting down because they needed capital. We're in this former growth at all costs, which everyone said, and we're like, sure, it's working. Like, we'll continue. A lot of people were getting markups. So, like, hey, on paper, it's doing great. A lot of these companies don't want to take markdowns. Even Masa said, he's like, oh, yeah, I'll invest in these companies, but they got to take a valuation hit that I inflated. And so, what's that mean? More dilution, a lower share price so that any current employees, potentially 409A, you can value it, they take a share price, and it's going to take years to get back to that price if you're lucky. And so the motivation isn't there as well. It's definitely been difficult. We're talking to our companies who have taken a hit on valuation at early and late stage,
And then
and a lot of my
hiring,
friends
firing
who
is
got
not
hired in the
fun
last
on
year
top of everything, people.
as
This
well.
isn't easy to
So
do.
we
And it's not like I hire and fire people, my whole career. These are people I've employed for the past 4 years. And unfortunately, sometimes you just have to do what you got to do. It's the craziest game of
they're your
them all.
friends, they're your
I didn't realize
family.
how crazy and fun it would be at the same time, but it's hard anyway. I'll end it here. Don't make it any harder.
Really, like, shoot your shot. You have one chance to reach out to me. There's hundreds, thousands of investors. Send them your information. Don't be afraid that someone's going to copy your idea. The whole idea is not probably
That's what
unique,
you
and if
said
it
about
is
my business
100%
originally.
unique, I'm also worried. Why hasn't someone done this before? Why haven't I seen this before? Right, and you proved us wrong in that regard. And so when I meet a founder, they're like, I'm doing this. No one's doing it before. I'm like, I don't know. I saw about a dozen of these in the last year, and they're private, just like you. And they're early stage, so they're not out there. And if they are, you just haven't found them. So, like, I've seen a dozen of these, and hopefully, as my job, if I do it well, I see enough of them. I'm like, okay,
And
maybe
you
there's
get to
something
see the
here. It's
difference between
saturated.
talent of
Where's the
very
market
similar
going?
industries
It's
and very
difficult.
similar
Your
businesses and
job is to
services.
create. Right. And we share none of this information. I don't tell the other founders. It's all locked up here in my head. And it's kind of like an unstoppable force meets an immovable object. You are that immovable object. You are creating the future. Us investors are trying to predict the future. And hopefully in a few years that will meet. And that is the startup life, that this crazy life that a lot of people think they want
How
to be
many
in
people
are
get
generally
jealous of
kind of
of
ready
being a
for, and
founder?
some aren't.
Every single
And
weekend I'm
luckily,
meeting new
our
people.
culture,
Oh, I make $250,000 a year. I make $500K a year, but I would
killing it,
love to be a big
crushing
shot
it.
founder. You make your own schedule, your own time. And I'm sitting there saying, luckily I've gotten this far, but OMG, this is not something, everybody should endure. This is not something I believe anybody should actually have to go through. This is where those founders are freaks. And, in a good way. You have to be pretty crazy and pretty insane to want to
Yep,
do
in a good
something that
way.
changes the world.
And ending it on an irony is you're leaving corporate to start a
Yep.
company to eventually IPO and answer to corporate or be acquired by corporates. That's the game that we live in because those are the people who have money, and that's kind of the name of the game. My job is to make money. That's what it really comes
It
down to.
isn't
It's
philanthropy.
capitalism
This
at
isn't a
its, I
charity,
don't know,
people.
best, but
And
it's capitalism at the end of
VCs
the
like
day.
Trace and other VCs and angel founders that angel investors we work with, they need to help us stay sane. They need to help us stay confident, and they need to help us in any way they possibly can. Otherwise, you know, it's a long, long road game. Nobody's going to get rich in 24 months, I promise you.
Yep. So reach out to us, ask us questions, and tell us everything about who you are and what you do. You know how to find us: Twitter, Facebook, Instagram,
Do it
TikTok,
in a nutshell.
LinkedIn,
Alrighty.
email. We're there.
Thank you,
We're here to
everyone.
help.
Hopefully, you
Reach
have a
out to us.
wonderful week and everything gets better and better. Good vibes.